Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial filing so interesting it involves Bitcoin, business deals, and a company from the Cayman Islands. It's like a financial thriller, but with more paperwork. This report is about Cantor Equity Partners, and it involves a potential business combination, a merger, basically with another company called 21. This deal has a lot of moving parts, including something called convertible notes and Bitcoin purchases. Sounds complicated, right? Well, we are going to break it down in simple terms. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can continue discussing this. First, let's clarify what this Form 8K is. It's basically a corporate breaking news report. Companies use it to tell the Securities and Exchange Commission, the SEC, about big events that could affect their investors. It could be anything from a big acquisition to a leadership change. In this case, it's about an update on a previously announced business combination. So what's this business combination agreement all about? Cantor Equity Partners, which is a company from the Cayman Islands, is trying to merge with 21. 21 is going to become a public company, which means that their shares will be available for trading on a stock exchange. Several parties are involved, including 21 Capital, a company called 21 Merger Sub D, 21 Assets, Tether Investments, and iFinex. It's like a big corporate family getting together. To make this deal happen, something called convertible notes are involved. Think of them as loans that can turn into company stock later. Cantor Equity Partners and Pubco, a corporation, made agreements with investors, including Cantor, Eep Holdings, and Cantor Fitzgerald, to sell $385 million, Cantor Fitzgerald to sell $385 million to help fund the deal, and that loan could turn into ownership in the future. The report mentions something called a convertible notes PITE. PITE stands for Private Investment in Public Equity. In this case, it means that private investors are putting money into the deal through these convertible notes. It's like they're betting on the company's future success. Here's where it gets a little more interesting. The investors had an option to buy even more convertible notes, up to $100 million more. They had 30 days to decide if they wanted to buy it. In May, they decided to buy all of them. This tells us that the investors are very interested in this deal. Now let's talk Bitcoin. Tether, one of the companies involved, agreed to buy almost $100 million worth of Bitcoin because of the option to purchase additional convertible notes. This Bitcoin would then be placed in a digital wallet. The company agreed to report to the SEC after they purchased it. Tether bought 9 on 17.4736061112 Bitcoin for an average price of $108.449.99 per Bitcoin. The report even provides a link so the public can track this digital wallet. It's unusual to see Bitcoin directly involved in a merger like this, but it shows how much crypto is becoming a major part of business deals. There's a lot of paperwork involved in this deal. The companies plan to file a registration statement with the SEC, which will include a proxy statement and a prospectus. These documents will give shareholders all the information they need to vote on the business combination. All the information will be mailed to shareholders so that they know what they are voting on. This report reminds people that some parties involved in this potential transaction are going to potentially try to convince shareholders to vote in a way that advantages them. In this case, the board members are likely to try and convince shareholders that the deal is good and that they should vote to allow the deal to proceed. This part is basically the company's way of saying, don't buy our stock based only on this report. They're saying this report isn't an official offer to sell or trade securities. Wait for the official prospectus and proxy statement before making any decisions. Finally, there's a section on forward-looking statements. Basically, the company is saying that they are trying to predict what will happen in the future, but it may not be accurate. There are lots of risks and uncertainties involved, and things could change. They list a number of risks, like the deal not closing, regulatory changes, and the price of Bitcoin being volatile. So what's the big picture here? Cantor Equity Partners is trying to merge with 21 in a deal that involves convertible notes and Bitcoin. Investors are putting money into the deal and the company is disclosing all the details to the SEC. There are risks involved, but if everything goes as planned, 21 will become a public company. Now let's step back and analyze what this filing tells us. The fact that investors are willing to put hundreds of millions of dollars into this deal shows that there is confidence. The fact that Tether is buying Bitcoin as part of the deal highlights the growing importance of crypto in the financial world. However, there are risks involved. The price of Bitcoin is volatile, which could affect the value of the deal. Also, there are regulatory hurdles to clear, and the deal could fall apart if shareholders don't approve it. Overall, this business combination seems like a potentially beneficial move for both Cantor Equity Partners and 21. The deal could help 21 grow and expand its business. Alright, that's our breakdown of Cantor Equity Partners' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.